Hi, this is Helen from Titan Funding Group, and it is Monday, the 24th of January. And what the heck's up with rates today? Well, this week is a very big news week. As you can see, we have all these different reports that are coming out. Nothing's happening today, though. And believe it or not, we have nothing on the rates go up or rates go down. There's just nothing happened today, but there will be this week. Okay, so let's look at what the mortgage-backed security bonds are doing today. As you know, each one of these candlesticks represents a different day. If it's a red candlestick, that means that the market deteriorated, rates got worse. If it's green, that means that they improved and they got better. As the candlesticks go up, that means rates go down, and as they go down, that means rates go up. This is the last month, and the longer the candlestick, the more volatility that we have. I'm looking up here. This is the 200-day moving average. And in years gone by, that was a pretty good indicator of what was going on. But as you can see, here's a 3-month chart. And you can see that we've been in this sideways of ups and downs and up and down, but not even close to the 200-day average. And here is the last couple of years, as you can see how it's moving. So as you can see, there's an awful lot of movement going on. Let's see what's happened today. I have minute-to-minute information on what the bonds on the secondary market are being sold. And as you can see, when we opened up this morning, we had went way up and then down, and it's volatile. So you can see if someone although we haven't had any pricing rate changes yet, that doesn't mean that they won't happen in the future. But right now we're 9 basis points above where we started. And these are the lenders across the nation. As you can see, not all lenders react the same. 70 have improved their rates, while 43 have not. Okay, so and right now we're 13 basis points. But let's see how that chunks down to you. Once again, remember we have the risk-based pricing that is Fannie Mae and Freddie Mac's pricing. It's an overlay. So today, depending on the credit score, I would probably be quoting between 4.75 and 5.25 on a 30-year fix. And let's go on down and let's look at the adjustments again. So as you can see, these would be the mid credit score of the lowest borrower on the loan. This is the loan to value. So normally let's say I'm looking at an 80% loan. Even if they have a 740 credit score on an 80% loan, we're going to have a quarter pricing cost. And as we go down to the lower scores, all the way up to 3. Once again, if we have a 45-day lock or no impounds, we're going to have these ads also. Let's see what the guppies are doing. Okay, it looks like I would be quoting somewhere between 4 and 5/8 up to 5 and an 1/8, probably, depending on the rebate that they want. And the credit score ads that we have down here. And over here on the 5-1 ARM, which is a really fun program, looks like I'd be starting out at 3.5 with a quarter rebate. But let's see how that really chunks down for our borrowers. Okay, so I'm doing an 80% loan, either for a purchase or a rate and term loan of $200,000. If we were doing a credit score of 740 and above, their interest rate would be 4.75, and the principal and interest would be this. They would have 5/8 of a point credit, so on that loan amount it would be $1,250. If their credit score was around between 640 and 659, this would be the rate, this would be the payment, and they would only have a credit of $500. So on this case, there would be just about a $55 a month payment difference and $750 more in closing cost. So there's no time like today to get a loan. Lots of money out there. Underwriting guidelines are strict, but they're still doable. We're closing a lot of loans. So give me a call. I'm Helen Williams. Here's my phone number. Here is my email. Hope you have a marvelous day and looking forward to hearing from you soon. Bye-bye.